the NYSE president. She's looking for another direct listing, another good day. But are there going to be more to come? Stacey, welcome to the program. Thanks for sharing some of your time today. Look, do you think the world is going to be changing here? We are starting to see higher yields coming through. We've seen certainly a very good environment for tech stocks to come to market and list. Do you think that environment is starting to change?
You know, I think, Guy, first of all, thanks for having me on. It is a great day for Roblox and the entire Roblox community. But let's take a step back and think about where we were a year ago. The IPO market was completely nailed shut as we were triggering market-wide circuit breakers, and the market was literally cratering just a year ago. And with that, we saw companies recognizing the power of the public markets, the fact that it was so efficient to raise capital in the public markets, much more so than it was in the private markets. And that really has been a driver to getting companies to go public over the past 12 months. Who would have guessed that 2020 was going to be the record-making year for IPOs? It literally was the busiest year for IPOs in history. So I think it's early to project what the rest of this year might look like just based on a couple of weeks. We certainly have a really busy pipeline and a lot of companies really excited to tap into the public market liquidity.
Can you give us a sense of where the SPACs fit in that pipeline? Because we do have data now that shows that you can get a SPAC pop once it IPOs, but once they make the acquisition, sometimes the stocks just don't hold up.
When a company goes public, they're in it for the long haul. Right? I mean, you look at how they progress over the several years. Many IPOs, many of the household names that we all know and love and use all so well that went public 20 years ago took them several years to really climb over their IPO prices. So this is a long-term game. This isn't short-term. We shouldn't get too focused on the first few weeks. What SPACs and direct listings both bring to the table are alternatives to the public markets. It gives companies choices so they can choose the path to the public market that makes sense for them. And that's based on their goals. SPACs give companies a little more control. They're negotiating with a counterparty and they have some control over their public entrance. It's a little quicker path to the public market. They have the flexibility to provide disclosures and information about future projections, which means that for businesses that are so focused on their future, like EV companies and elements like that, that's an important part for them. So those are some of the drivers for companies choosing SPACs. With a direct listing, it's really all about cost of capital and wanting to let the market price the value of their company and see what that allows. And it's also about democratization. So with Roblox, they wanted the Roblox community to have access to their public debut. And that's part of why they pivoted and shifted to a direct listing. And it's an exciting moment for them.
Stacey, on a day when we're seeing a huge stimulus package being signed down in Washington, we're going to get the president to sign that later on this week. The U.S. economy is going to be on a tear for the rest of this year. Yields are going to go higher. I hate to come back to this point. Do you think the world is shifting right now? Do you get a sense that investors are viewing it differently? We have a huge amount of stimulus coming into the economy. Stocks have already had a great run. What do you think happens next?
You know, I certainly think we're going to continue to see evolution in the markets. We're getting new participants in the markets. The stimulus has driven a lot of access into the markets and certainly a lot of market activity. But we're recognizing the fact that there are new players in the markets today. We're seeing increased level of retail participation throughout our markets, and that's going to transform the way markets operate. What we'll do as an industry is take a look at what we've learned and do we have, and should we make any changes to infrastructure or increase transparency?
Well, yeah, let's get on that point, because I was reading an article today about how when a SPAC makes an acquisition, sometimes the retail investor, they don't understand they have to vote on it as a shareholder. So there are some learning curves here. So what is something that the NYSE can do, or are there better SPAC rules, for example, that can help with that?
Yeah, it's really important to recognize that investors in SPACs have choices a number of times along the way. They can redeem their shares. They can vote on the approval process of on the merger, on the deal that's being rolled out. Where I think there is a lack of transparency is around the structure on promotes. I expect to see that continue to be an evolution. We're already seeing SPACs evolve as new SPAC sponsors are taking a different approach to their promote fees. I expect to see that more of that move into disclosures as the SEC changes at the top, and we expect to see Gary Gensler potentially be stepping in as the SEC chair. These are the types of things he and the SEC will look at to see, do investors have the information that they need to make informed decisions? This is all about marrying and balancing investor choice with investor access. Both of those things are key, and we can't trade either one of them off. So SPACs are giving investors access to companies earlier in their life cycle. That's a good thing. But we also want to make sure, I said choice and access. I mean investor protection and investor choice. We want to make sure they have those protections as well. So that's the balance we're striking.
While we're on the subject of SPACs, I'm sitting here in London, so let me ask the parochial question. Do you think London's late to the party? It's going to change the rules. Do you think London's going to be a serious competitor when it comes to the SPAC story? Do you think it's going to attract SPACs here? What do you think about that?
I expect they'll look at what opportunities are out there for growing the business. Frankly, I think the legislative structure has been a distraction on some fronts, and so many businesses are trying to figure out how Brexit's going to impact their businesses, and I think that's something that's top of mind for a lot of companies based in the UK.
Do you think you're going to have more competition, either from exchanges here or exchanges elsewhere?
We're always focused on competition. I mean, I think we should recognize the fact that the U.S. markets, while they are the deepest and most liquid markets in the world, we can't take that for granted. We can't assume that that's always going to be the case. If you look back over the past 3 years, the 10 largest IPOs that have gone public, only one of them has gone public in the United States. So we shouldn't take our eye off of the fact that there is global competition. There always will be global competition. And we need to make sure that we're balancing investor protections with investor access, because that's what attracts people to the U.S.
Stacey, it was roughly kind of from memory this time last year that you closed the floor. People have been coming back. What is the return to work program? How are you going to make that work? When do we get back to normal? How different will it be?
It's an evolving situation, just like we've heard. I mean, you were just reporting on stats and cases in Italy, and that's what we're always looking at and focusing on. So we closed the trading floor for 2 months, just almost a year ago. You're right. It was just about a week from now. We were closed for 2 months while we were learning a lot about how to protect ourselves from the virus, how to implement safety measures that would keep the people here safe. And so we've done that. We've reopened, it was May of last year that we reopened the trading floor, and we've been able to scale up and scale back as needed, so that based on the local conditions, I'm really optimistic on the vaccine progress and what we're going to be able to roll out. Companies like Pfizer and Johnson & Johnson and Merck are all helping. I mean, that's going to change the landscape. And so I'm optimistic that we're going to come out of this in the near term.
Stacey, one last question here for us. In terms of, you brought up Gary Gensler. What do you think could actually come down from DC in terms of regulation when it comes to short selling, restrictions on retail trading?
I think those are the things that become top of mind, just because, frankly, the timeliness of what's transpired over the past few weeks. So certainly those are issues that will be reviewed. But we've worked with Gary Gensler when he was chair of the CFTC, and he's a person who likes transparency and likes to make sure that people understand how the markets function. And so I expect that he's going to be focused on transparency. He has made some comments already to date about areas of examination that the SEC could take a look at. I think first off, we'll start by answering the question, is the information out there so people can make informed decisions? And then second, are there any changes we need to make about how the markets work? Frankly, there are aspects of the market that are not widely understood. And so that's an important area of focus, and I expect to see the SEC look at that early in its tenure.
Stacey, one final quick one from me. We get a transaction tax. You moving to Chicago? How seriously should we take this threat?
We should take this threat very seriously. Financial transaction taxes have not worked. In London, we've seen people look for alternatives to on-exchange transparent transactions. So the trading volume goes elsewhere. It's a tax that gets passed to the end investor, so the end investor pays that tax. In the U.S., we're thinking about it and looking at potential transaction tax, both at the state level and at the federal level. So at the state level, it's easy for us to relocate our business. We don't want to. I want to stay in New York, but moving is a possibility, and we would do that if our customers ask us to. But at the federal level, it's not just about moving states. So we have to recognize the fact that volume can also move outside of the U.S. or to less transparent ways. Investors will find access to opportunities. And we just should keep in mind that the end investor is the one that pays this tax.